oportunidades. James Athey, investment director at Aberdeen. James, good morning.
Hi, good morning.
What do you think about 2023, this outlook and your forecast?
I mean, on the face of it, it probably sounds a bit consensus. We definitely expect growth to continue weakening into next year. We do think there are recessions coming across all of the major economies. I guess where we probably differ from consensus is just the extent and the depth of those recessions. I think particularly in the US, again, I think consensus is expecting weakness in Europe and the UK to a much greater degree than in the US, where a lot of people believe it's a very shallow recession which is coming. We are more skeptical. We're expecting a more protracted downturn in the US.
What do you think about the role of central banks in 2023, in this year, with pause or with a pivot on this hike?
Yeah, the word pivot seems to be certainly word of the second half of this year. It's not well defined. I think part of the problem with the discussion in markets around a pivot is different people mean different things when they talk of a pivot. I think central banks are already showing that they are sensitive to the growth impact of their policies. There are long and variable lags. They know that. What they don't know, obviously, is exactly how much economic damage is going to be done as a result of the hikes so far. Obviously, inflation is going to be critical, and therefore, at a headline level, energy prices will be critical. They are very difficult to forecast. Inflation is very difficult to forecast. But based on what we know today, we are expecting inflation to decline reasonably significantly in the first half of next year. That should take off a lot of pressure on central banks to continue hiking. In the second half of the year, falling inflation which is much closer to target in a lot of cases, and a recession, we very much are expecting central banks to switch into easing mode.
Are there only one thing that could change everything in inflation, that is the end of the war?
Yeah, I mean, yes, of course, that will be, certainly from a market's perspective, that will be leapt upon as being a very disinflationary outcome. It's difficult to say exactly how the dynamics would play out, but from a sentiment perspective, of course, that would be hugely significant. But remember, that is just one of the drivers of high prices that we've seen. There is a lot going on beyond just the situation in food and energy commodities in Eastern Europe. But yes, as a betting man, I would definitely expect lower inflation outcomes if we were to see an acceptable end to that situation.
All this picture could be emerging markets the main key for 2023?
Yeah, I've been liking emerging markets for a little while, actually, particularly in local currency space. Increasingly, the central bank reaction in emerging was a much more credible and orthodox one. They were quick to recognize the inflation problem. They were quick to act and act aggressively. And that's seen yields rise significantly across the entire complex, particularly in places like Latin America. And to me, it's been likely that we have been in the process of peaking inflation for a few months now. Remember, the US has seen 4 consecutive lower headline prints. And so for the last few months, I've been increasingly confident and emboldened to add emerging market local currency duration, where there has been a credible response against inflation and there are high nominal and real yields on offer. And now we're seeing in this latest leg dollar weakness, which of course supports emerging currencies, but also because treasury yields are falling, which assists with local currency yields coming down in EM space. I do expect that to continue through 2023. I would caution, though, that we are still expecting one last round of significant risk off when the recession becomes a reality in the developed world. It's likely that risk assets will suffer then. So we may not be completely out of the woods in EM, but definitely on a medium-term basis, it's great value here.
What do you think about stocks in US and in Europe? What do you think is better for investors in this 2023?
Well, I mean, on a valuation basis, the US still looks far too rich. I think actually the UK and Japan are probably the two indices that I would prefer to be exposed to. I think Japanese equities, currency unhedged, because the Japanese yen is incredibly cheap, are quite an attractive prospect. UK equities have a PE ratio really in single digits, and that looks much more attractive. US, to me, still looks far too rich on the back of far too high earnings expectations. So I think the US will probably underperform in the first half of next year. But I think as we get into the reality of the recession and the Fed is forced to the table in terms of easing, I think at that point, US stocks would be where you'd want to be.
Thank you very much, James Athey, Investment Director at Aberdeen. Good day, good business.
Thank you, you too.
9:57 de la mañana con esa mirada también al outlook.